Joining this evening, and we are here today, savvy ladies, talking about financial assets. Everything you need to know about your statement of net worth, depositions, discoveries, subpoenas, settlements. What do these words mean? And more importantly, what do you do about them? And we have some phenomenal experts here this evening. We had over 150 women register for tonight. So it is going to be a fantastic evening, a packed house. And know that we're also going to be recording this. In fact, this is one of a 4-part series of everything you need to know about putting yourself on the right financial track before, during, and after a divorce or separation. And we have recorded all of them. So even if you missed last week or can't make the next two, by registering for today, you automatically are going to be able to gain access to those fantastic recordings. We have a packed house, as I mentioned tonight. I do want to make sure that you have all the tools for learning. For me, it's coffee. Don't judge me. It could be a lot worse. For me, it's coffee. Another thing you might need is maybe a pen, a piece of paper, taking some notes because we're going to be going through so much information and I don't want you to miss it. We have some very special guests, some amazing experts this evening. But before we kick it off, I want to introduce the most important person on this call, and that is Judy Harps, who is our amazing executive director of Savvy Ladies. Judy, you want to say hi? Welcome, everybody.
Yes, hi everyone, and welcome to our second panel series on divorce. I am so thrilled you are here with us tonight. And as Stacy has said, it is really fantastic. It's really an honor, and I'm so proud to be able to pull these series together for you. It's one of many that we're going to be hosting this year. So stay tuned for more to come from Savvy Ladies, but let's kick off tonight. So let's get started.
That sounds good for me. And let me go ahead and introduce one of my favorite people. So Lisa Zeiderman, one of the people who makes me want to work even harder. And I work hard, but Lisa actually puts me to shame. And Lisa is very active in Savvy Ladies, not only a board member, but on our executive committee. And she is a co-VP. And I also want to welcome Carol is here, one of our board members. Great to hear you. Good to see you. Lisa is a managing partner at Miller Zeiderman, and she is a matrimonial attorney. You probably have heard her before because she's been on newspapers, radios, TV, and she's known for not only difficult, complex cases, but also financially complex. And she's one of the few matrimonial attorneys out there who actually is on top of being a attorney, a certified divorce financial analyst, and she's also a faculty of the American Academy of Certified Financial Litigators. So a lot more that could be said, but let me just suffice it to say, I'm really happy to be sharing the moderating tonight with Lisa because she brings so much expertise to what we're going to be speaking about this evening. Lisa, do you want to say hi?
Thank you so much, Stacy, and welcome to everybody here. I'm really excited to do this seminar. We have such a phenomenal panel tonight, so I am thrilled.
And talking about that panel, a friend of mine, so Karen Sparks, the CDFA world, Certified Divorce Financial Analyst world, it's kind of a small world. I guess there's not too many of us, and there's not too many kids that, as a little girls or little boys, say, I want to grow up to be a divorce financial analyst. So somehow we find each other, and I have such admiration for Karen. She is actually on the West Coast, so thank you for joining in from the West Coast, and is a divorce financial analyst there. She works with her clients. She also works as a neutral, which not all people do. And so that's wonderful. She can help with individuals, helping them split the marital assets, understand where they're going to be in 5, 10, 20, 30 years. And she's going to bring to this evening a wonderful insight into how to go through this process, understanding all this terminology and understanding, how to create that long-term financial security. Karen, it's great to have you here.
Happy to be here. Thank you so much, Stacy, for that introduction. We've known each other a long time, and it's an honor and a pleasure to be here tonight. And I just want to say thank you to the Savvy Ladies team for putting this on. And we're going to have a great evening together, everybody, learning, growing, and getting stronger as we enter these various transitions. So happy to be here. Good evening. Well, good afternoon for me. I'm on the West Coast.
Yeah, exactly.
So good afternoon and good evening, everybody.
Wonderful.
And it's my pleasure to introduce our other two panelists, Gary Rosen. I've known Gary for quite some time. Gary is a CPA, CFE, CFF, CVA, and a CGMA. He is a partner in charge of forensic valuation and litigation services at Marcum LLP for the New York region. Gary has over 40 years of financial advisory, consulting, and public accounting experience with an extensive background in fraud engagements, forensic accounting, complex litigation matters, lost profits, personal injury claims, shareholder partnership disputes, and other areas of investigative accounting. He has testified as an expert witness in numerous litigation cases covering matrimonial matters where he's able to communicate complex financial information in a manner that juries and jurists can actually understand. Gary is tremendous at what he does, and I really welcome you here, Gary, tonight. You are a fastidious and wonderful accounting firm and a great person to have on a team.
Thank you, Lisa. I really appreciate it. I'm glad I could be here to share some of the knowledge I have and some of the war stories that I've encountered over the years.
And it is my absolute pleasure to also introduce my friend, my former client, and one of the people who I look up to probably the most in the world, Dr. Gaitan Mishad. Gaitan Mishad is the Chief of Pulmonary Critical Care and Sleep Medicine at the University of South Florida. She is a dedicated lung and critical care doctor focused with a primary focus on cancer patients. Dr. Mishad began her career in Canada at the University of Calgary, and she's worked in such prestigious institutions as Harvard, Yale, and NYU prior to taking her most recent position. During her nearly 20-year medical career, she obtained a master's degree from Dartmouth College in healthcare delivery science. She survived a contentious divorce, and she obtained full custody of her twin 9-year-old daughters. She worked her way up on that academic ladder, and she became the first female professor and division chief in a very male-dominated field, all while successfully battling breast cancer. Dr. Mishad provides a very unique perspective of health and finance, having been on both sides of the exam and courtrooms as both patient and patient advocate, as well as client and expert witness. I will tell you, Dr. Mishad is someone who I really try to emulate. She made it through. She did an unbelievable job in terms of raising her children and taking care of herself and being an incredible client at the same time. So I am so honored to have you here, Gaitan.
Thanks, Lisa. You know, I'm just hoping that I'll be able to give a little back for everything that I got when I was going through all of this, because I was really fortunate to get good advice that was very solid and was actually very contextual. So I hope maybe I can give a few pearls of advice to those of you who are going through this.
Well, thank you so much, Gaitan. And I'm going to kick it right back to Judy. And Judy has a special thank you message. This could not have happened without the fantastic sponsors that have donated to this panel series that goes towards not only this great programming, but also our helpline. We're serving over 100 women, matching them one-on-one with certified divorce financial analysts, CPAs, CFPs, to work one-on-one for the financial support they need, the answers they need to get through difficult times and make good decisions.
Well, yes, we want to thank all of our sponsors, and we could not be pulling off this program without them. So I am thrilled to be able to thank Miller Zeiderman, HelloPrenup, Guberman Advisors, Francis Financial, Marcum Accountants and Advisors, Soberlink, Worthy, MFL Coaching, and Wealthy Single Mommy. Each one of you have made a really wonderful contribution and donation to Savvy Ladies. And it is really, as Stacy is saying, helping women. As this month alone, we are seeing right now about 150 women coming to our helpline, asking questions around divorce. We know January and February are key months where divorce is top of mind, and we are here to answer all those questions. So even after tonight, when you have a personal question around your finances, please join, feel free to visit our helpline and get your questions answered. So thank you. And again, thank you to all of our sponsors.
Thank you so much, Judy. And for all of you, I will be putting in the chat just some great resources as we go along tonight. Also know that I'm going to be monitoring the chat. So if you have questions, I'll make sure that I ask them, hopefully at that right time. If we don't get to it, we're also going to have questions at the end. Gaetan said something that I thought was so insightful of having the resources and having the information that helped you make good decisions. And as part of that, I'd love to ask you, Karen, what is a certified divorce financial analyst? Because most people haven't ever really heard of that, let alone know what would that person do and could they really help me?
Absolutely. So the designation of professionals who are in the field, such as myself, as a certified divorce financial analyst, are your keys in the divorce and separation conversation. They are the professionals that are going to help you decipher the requirements that you need to fulfill on behalf of counsel and the other legal professionals in the case. And they're also there to help you really get an understanding on your finances, how those finances are going to be affected by the journey, as I like to call it, of the divorce procedure, and helping you to understand the issues of support, the issues surrounding your real estate, the issues surrounding employee or business benefits, understanding income coming from the operation of businesses, and all the way flowing through. And in my practice as a certified divorce financial analyst, I've been in business for 11 years now. I love what I do. And in serving clients, I like to make sure that we're covered from the beginning to the end. And so it's such a rush to the finish when we're dealing with such an emotional area. But I make sure that my clients are being connected to my allied circle of professionals to take care of that estate planning, to take care of these beneficiaries. Are things done? This is a full circle process that we're actually dealing with. And it's a marathon and in no way a sprint. But a CDFA is there to walk alongside you and to give you that confidence to step up, to find your financial voice, and to make the decisions that are in your best interest.
And for all of you, you can check the chat. I just put in a link to the free Savvy Ladies helpline. Please check it out while we are speaking tonight. You can even go ahead and put a query in, and we will definitely connect you with someone tomorrow, if not be able to answer your questions tonight. I'd love to hear from you, Karen. How can you keep perspective? How can you be objective when you're going through one of the most emotionally difficult, trying times of your entire life?
Absolutely. There are several things that I wanted to point our attendees to tonight, and those who may listen to this presentation on tape later. One of the things that I want to say first is breathe. Breathe. It's very important that you center yourself, that you settle yourself. And once you do that, I think it's also important to understand that divorce and separation is not a one-stop professional decision. It's important for you to understand the buffet of choices that you actually have, from very seasoned litigation attorneys to mediation specialists, to the collaborative law process, if that is something that it would be appropriate for your family. There are a number of ways that this conversation can go. And when you stop to breathe, when you stop to center yourself, you're able to take advantage of trying to find out what works for you. I mentioned a term that some of you may not be familiar with, and that's collaborative. I am a financial neutral with a local collaborative group here in the Bay Area. That is a team approach, if you will. It's a different type of team approach, let me say that, to the divorce process, in terms of there's a professional like myself as a part of the team. Each party has an attorney, And then in terms of what's needed, so is there professionals needed for children? Do we need some mental health support? We can bring in whoever is needed. I would say that when you're looking at what you need, look very critically and realistically at who you are and who your partner is. All processes are not appropriate for all cases. No matter what your friends and family tell you, you have to source this process for yourself. And that's one thing that I want to be clear about. It's very difficult when you're in, and I was in it, and I will just share with all of you that many, many years ago, I have a daughter, she's 25, but when she was 4, I went through a very serious situation with emotional, psychological, and physical abuse. I was there. Narcissism, anything you can name, I had it. And so being able to step back and realize that she was important, that I was important, and that I needed to figure out with my legal knowledge how to come through this divorce process is what I'm actually trying to communicate to all of you today. Really look at where you are and what you need. And I always like to say that divorce is like a real estate transaction. Follow me, follow me. You need to approach the process as if you're a buyer of a piece of property. And when you are purchasing property, you're looking at every jot and tittle. You're doing that ching ching moment when you're walking through a house. You're like, what am I going to have to do? Da, 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 da. Same thing with divorce. Same thing. You need to be the buyer. Look at your situation, your partner, your children, if you have any, who's going to be impacted by this, and try to figure out what is the best way to come through it. And also understand that in coming through the divorce process, Stacy, sorting out professionals is one of the hardest things to do. You're like, where do I go with this? Particularly if you don't have any options, nobody's got anything. And so as you're looking at resources, as you're reaching out to organizations like Savvy Ladies, as you're trying to sort out what is appropriate, understand it's a two-way street. So you're interviewing your professionals as well. You're interviewing your professionals as well. How comfortable do you feel with them? Do they have the expertise to take you to the finish line? Lisa is one of the most renowned matrimonial attorneys in the Northeast, and she will bring you to that finish line with that skill set, right? So figure out what you need and interview your professionals appropriately to make sure that they are good members of your team. Do not be shy about that. Ask them if they're experts. Have they testified at trial? If you're seeking to hire certain members of your team, start asking those key questions. How often have they dealt with a situation such as yours? Okay, how has that all worked out? And be sure that you can do that. Because at the end of the day, you want to make sure that you're building your team that's going to serve you best and take you through a very arduous, but if you have the right team, successful process to get you to that next transition of life. And so those are the things, Stacy, that I want to share with our audience today in terms of that process.
You know, you so bring it to home. It makes me think about the first triathlon that I did, and it really was a team. I had double knee surgery and needed to do just a ton of physical therapy. I needed my husband to like step up and take care of the kids. I hired a nutritionist, and it was like a team that finally got me past, you know, the Ironman finish. And, you know, we don't think about that for divorce.
Right.
We just don't, and how important. Lisa, I'd love for you, I know you have some questions for Gary, because Gary, you bring a different perspective, financial as well, but a different perspective and a different skill set that can be imperative going through this process.
So Gary, it is great to have you tonight because you do bring a very different skill set than we've spoken about before in our sessions. And I'm going to start by asking you what it means to be a forensic accountant as it relates to a divorce action.
Yeah. Thank you, Lisa. It's a pleasure to be here. Stacy, thank you for your kind words also. It essentially means, and this is why I left auditing in the first place, that you're not looking in the rearview mirror anymore. And what I mean by that, you're looking prospectively. When I was an auditor, I used to issue audit reports. They used to be thrown in a drawer, never to see the light of day. Now I feel like I'm making a difference in people's lives. And I'm doing that by going through the documentation and information that's available to me, but also looking at other information that's readily not available to a lot of people as they go through the process. So for all intents and purposes, as a forensic accountant is CPA or CFE, CFF, Certified Financial Forensics, Certified Fraud Examiner, who does an investigation to follow the money. And you've got to believe that the work papers that you're producing to support your conclusions are going to end up in a court of law. That's the most important thing.
So Gary, sometimes you are retained by a particular party in the divorce action, whether it be the wife or the husband, or actually through their attorneys. We can
Correct.
talk about that a little bit. In
Yes,
fact, that's a
an
little
important aspect. Absolutely.
important aspect. And sometimes you are appointed by the court as what we call a neutral. Can you explain the difference of being a neutral and then being retained by a party? And then we'll actually delve into what it means to be retained by the attorney and why you might want to do that instead.
Absolutely, absolutely. Being retained by one side, you're always going to be an advocate for that individual that you're representing on that particular side. Although you're going to be fair and honest in everything that you do, because your reputation is what you have to stand by when you get on the witness stand, you are going to look at things in the eyes of the individual you're representing. They're the client. When you represent both parties as neutral, it's essentially like playing chess against yourself. What you do is you sit down on one side of the chessboard, you make a move. You know in your head what the other move is going to be when you get to the other side of the chessboard. And I say that essentially because there's less strategy available to you when you're presenting somebody as a neutral. Everything you do has to go through both parties, has to go through both attorneys, has to go through the court, and it's like doing an open book. Another analogy I could use is like playing blackjack in Vegas with an open hand. You know everybody else's hand, you know what else is going on. Whereas in a neutral, you have the ability to do some planning and have some strategic recommendations as you go through the process.
Now, I mentioned, and this wasn't in my outline, but I realized we should include it because I think it's so important. So sometimes you are retained by a party directly. So either the husband or the wife, they sign the retainer agreement, they retain you. But sometimes a law firm will retain you instead. The husband or the wife will be responsible for your fees, but you will actually work for the law firm in dealing with the husband or wife's valuation. And that is called a Covell agreement.
Exactly.
Explain what that is for people who don't know.
Sure. A Covell agreement or Covell letter essentially is just what you said, Lisa, where an attorney will engage my firm. I get both the attorney as well as the client, the end client, to sign the letter. One is responsible for the financial obligation, paying all fees. And I clearly state in the body of the letter that the attorney is not responsible for the fees. But the importance of it is that everything that we do is protected by attorney-client privilege. And that's very, very key, especially when you go through the discovery process. And if you work with me, you'll see that most of my emails also have in the caption line, attorney-client privilege communication. And by doing that, we are executing the agreement and understanding under that Covell letter so that things are not discoverable by the other side. Because as I said a few moments ago, when you're working with one side through an attorney, you can have some strategic decisions or discussions that could be very instrumental in your case. And you don't want the other side to get a peek under the hood.
Now, people often ask me, do I need a forensic accountant? Clients come to me, during their first consultation and they say, well, do I need a forensic accountant? What is a forensic accountant? And so when do people, what are the areas that people should start to think about using a forensic accountant to help them with?
Well, essentially, a forensic accountant could do a number of things. As you mentioned, I have a number of certifications, and I use those certifications, whether they're my fraud certifications, my valuation certifications, my CPA, all of them are really intertwined. And a forensic accountant will use all of those skills. And even if somebody is only a W-2 type employee, there might be other ancillary income or investments that they might have, whether they be side businesses, whether they be stocks, whether they be other investments that they've made. You really don't know what you have until you take a deeper dive and look at what is there. And we're going to get into a deeper dive later on in the net worth statement. And I'm going to talk about some of the tricks that I've done and things that I've done through my career that have basically been the thread that I pulled. And essentially, when I started to pull that thread, I got a little tug. And what do? I pull a little harder. And the more resistance I get, the more valuable that thread becomes, because I know that person doesn't want to let go of that thread. So whenever you see stop signs go up, that tells me that I better go get a full tank of gas because I have a long ride in front of me.
Oh, I like that analogy. I'm going to be using that, Gary. So there were three areas that I frequently use forensic accountants like yourself.
Right.
One is to perform something called an income stream analysis. And can you explain what an income stream analysis is for the layperson and
Sure.
why we do that?
Sure. An income stream analysis or lifestyle analysis, as it might be, is similar in nature. And essentially what it's doing, it's telling you where your income is coming from. So in other words, you're living a certain lifestyle. And how do you know that you can afford to live that lifestyle? I'm going to digress for a second because I'm going to tell you one of my favorite stories about a case I was involved in. I had a case where a woman came to me and her husband made $45,000 a year as a cotton trader. He provided his W-2. It had all the proper information on it, all the bells and whistles. And I said, that is amazing. I said, he makes $45,000. You must be an excellent shopper because you have a house worth $2.3 million. You have an apartment in Tashkent, one of the former Soviet republics. Your son, who went to NYU college without any loans, and you are allowed to take out $300 from on a bank card on an ATM every Monday, Wednesday, and Friday. And you also go on 2 vacations a year. And she said, I don't know. He makes $45,000 a year. Well, the more I dug into this analysis, at the end of my analysis, I met with the gentleman and we were in the room with the attorneys. And one attorney said to me, did you bring protection? I said, why? Did I need it? And he said, well, all you're digging and uncovering made the wife aware that her husband was Russian mafia. And what he's doing is he had this commodities trading, cotton trading company set up to be his front. And he was essentially made, I believe my lifestyle analysis showed over a 1.5 year period, because that was the period that we were doing, $2.8 million that they had spent on real estate, on apartments, on homes, as well as the lifestyle. So I guess doing a lifestyle analysis is a great place to start, but it's only really the beginning of the journey that you're going to take as you go through the divorce process.
And so, Gary, we already have in the chat, is it too soon for us to tell Gary how much we love him? And I'm going to jump in because what you just brought up is something I think that is close to a lot of people's heart. Shay and Shaw, hopefully I'm saying it right. I so apologize, but her husband chooses not to work. He receives cash in hand, so it's a cash business, and he doesn't have an LLC formed. How would she get a clearer picture of the money coming in? How does she find the bank accounts for the business, or maybe even others things that might go under the radar?
Yeah, you might
question.
be surprised because the business might not even have a bank account. If there's cash payments going in or going out. I did another business valuation, had nothing to do with the divorce, but this particular one was a fence company. And that fence company was a cousin of a very well-known fence company in the state I was doing the analysis, and he was trading on the family name. The only thing is that he never set up a bank account, and everything that he did it through cash. I don't know what type of business your spouse is in, but one of the things that we've been involved in doing, and I've done this before, is we're involved in a transaction where the gentleman owned a gas station. And he said, I don't take credit cards, sue me. You're never going to find out what's going on. So We sued him, and what we did is we subpoenaed the oil delivery company. I then reverse engineered by using the price per gallon of gas sold during the 3-year period. And ultimately, we found that there was approximately $1.9 million of unreported income from this gas station. So there are ways to do it. What you've got to do is probably take an inventory. And what I'd recommend, start to write down all of your expenses, whether it's the coffee at Dunkin' Donuts, Starbucks, whether it's whatever you spend at the grocery store. Keep an inventory of what you have and what you're spending. And I think you're going to see patterns start to develop. And then probably what I would do is
Hi, Ben. I'm listening to Zoom right now.
What I would probably do in my mind is then multiply that several times, because I got to believe that you're only receiving a fraction of what he's earning and giving you.
Great
Thanks.
comment.
Thanks, Gary. Gary, the other thing that I know that you do is valuations of businesses. And so when you first start to do that, well, first of all, why is it important to do the valuation of the business?
It's very important because even if a business is losing money on the face of it, it probably has value. A perfect example, Amazon loses money. It's trading at $2,400 a share. Last I checked, it was down a little bit. But what I'm saying to you is that businesses, even if they lose money, does not mean that they don't have value. There's value to the IP, there's value to the trade name, there's value to the reputation. And probably, if it's a closely held business, dollars to donuts, that individual is putting through a lot of personal expenses. I just got engaged to do a valuation for a business. And the first thing I said to the gentleman when I was proposing on it, is said, it will depend upon how much we have to normalize the business. Normalization of a business is essentially, let's say the company's making, I don't know, throw out a number, $500,000 a year. But the owner of the business is putting through $500,000 worth of mortgage payments, electricity for the home, cars, insurance, relatives on the payroll, etc., vacations. I had one case where the partner paid for his daughter's wedding, $250,000. Put it through the business as a business expense. So what we do is we normalize the business and we try and determine what the business would be worth if a person was operating that business under normal circumstances.
That's great. And I think that is one of the key issues that I think people have, is sometimes they don't understand how these expenses are being paid, because to your point, they look at the income tax return. The income tax return sometimes says minus, something on their business tax return. And yet all of these expenses are being paid and they're living the life and they're going on their vacations. It turns out that all those expenses are being paid through the business. And unless you do that valuation, you will not really understand what the business value is. And in domestic relations law, in matrimonial actions, there is not only the value for the business, but then there is a division of that value for the business. So while your husband or your wife, whoever has the business, may get the business, because somebody like Gary comes out and says the business is worth X, then you get 20%, 30%, 40% of the business. It's rare in New York, I'm just going to say this, that you will ever see probably anything more than 40% of a business, because there is definitely an inclination to give more to the titled spouse, meaning the person who owns the business, for lots of different reasons. But it's so important to get those values. So
because it's a lot better to start with a higher value. So I'm going to say one, I'm going to stop for a second, but I'm going to say one thing because you're going to hear me say it throughout the night. I'm going to say knowledge is power, because the more you know, the more powerful you can be. And I'm going to say something else, and you're going to hear me say throughout the night, called trust and verify. I think those are two important things. So if there's two things that you can come away with, I think those are two important attributes.
I have a couple questions that came through. One is a hedge fund that coincidentally closed as soon as the divorce action started. And second, another question, what about like a book deal or something? Like the book was written during the marriage, book deal came out. So those are two things that came out.
I would say if the book was written during the marriage, that the revenue stream generated from that book deal would go to both of the spouses. So what you would have to do is you'd have to see, first of all, if there was any advance paid. And then you would have to also determine, because when publishers give somebody a book deal, they already know in their mind whether or not it's going to be a good book or not, unless you're self-publishing your book. So what you could do is compare it to other books that have sold within the industry in order to get an idea as to what the revenue stream might be. So I would say, and again, that might be a legal question, but I would say if you use marital resources and spent marital time to write a book during a marriage and the book deal is signed, then I think that the revenue stream should be able to be clawed or included in your calculations. Regarding the hedge fund, that's a very regulated industry. I think that there's a lot of information that's out there that you could probably get. We look at not only the financial data, but we look at board meeting minutes. We look at correspondence. We look at email chains. They don't just close up hedge funds. We'd have to look and see if those assets were transferred to another fund of a similar nature, because that's done all the time. So they might start a sister fund or a shadow fund, and those assets might have been transferred to another fund where they're generating similar type of returns.
Can I jump in here and ask Gary to clarify something?
Yeah.
Is that cool?
Please do. Please do.
Yeah. Hey, Gary. How you doing? Big fan, Clementina over here. So 2 questions. One, I have been writing a book while I start a startup business and am the primary caregiver to 2 children. I probably am about 75% of the way through, but not finished yet. In the future, can I expect that there will be some claim on whatever happens with the book? That's the first question. So I'll pause there. And
again, I think that's more of a legal question, but if I was representing the other side in this case, I think I would make a claim because of what I just said, because the time was spent, marital assets, marital resources were all spent as part, even though it's intellectual property that you might own. I believe that the claim could be made, but I'm going to defer to the attorneys in the room.
Even in the future, even for a future publication date?
Again, I don't know if it might be prorated. I would argue that it might have to be prorated. So you just told me that you know that you're 75% of the finished with the book. So if you got a book deal for $1 million, I could make an argument. I'm not saying I would win, but I think I can make an argument that there's a proration attributable to me because of the sacrifices I made, which gave you the ability and time to write that book.
Very helpful. Thank you. The second question is, I'm the business owner. Again, still even though I've been at this for a few years, the fact that I haven't had a lot of support, I feel like I'm still in startup mode. Is he entitled to any future success of that?
Again, what I would do, again, now I'm switching my hats and I went from representing him to representing you. So what I would do is I would document all the ways in which you did this on your own without the support that he was providing.
Yeah.
So
Perfect.
Giving any information, if he was giving any child support or any support to the children, because you just said some children that you're raising as well, I would attribute those dollars to the child support rather than your lifestyle, and that you were doing your lifestyle in order for future gains. So again, that's why I love being an advocate for my clients. Although I enjoy being appointed by judges as well, but I really feel that I'm better serving my clients by being strategic in helping them.
Thank you so much.
You're welcome. You're very, very welcome.
Stace, I'm going to turn to you.
Yeah, I feel like we could jump into this, but I know we want to keep on going. And so the dreaded statement of net worth, other parts of the country, we call it a financial affidavit. There are different terms that we all use, but it is something that is so important. And in my opinion, it's one of the things that you have to do to make sure that you really understand where you stand financially. And Karen, can you just jump into what a statement of net worth is, because it sounds very simple, but it's not. It is much more inclusive of just the value of that checking account that you have.
Absolutely. In my work as a CDFA, you guys on the call, this is where the homework begins. There are two documents that are essential for me. One is the net worth statement, as Stacy said, that has different nomenclature across the country. Here on the West Coast in the state of California, it's an income and expense deck and an asset and debt declaration. Regardless of the name, the purpose is the same, to determine what the income and the expenses are. The second document I pay very close attention to is the tax returns, or the tax returns, whether they're business, individual, or what have you not. Those are treasure troves of information. How do we get started on this? This is very daunting. The forms that we use out here seem simplistic. They're not. So let me tell you how to approach these and how I work with my clients on these. First of all, you need to determine what, in your estimation, is separate property. First, get that straight. What is something that is clearly separate property? That's defined similarly across the nation and more of a question for your legal counsel, but know that you need to get that. Once you've gotten that, here's what you're doing in this statement. You're identifying all forms of income that you have. And you want to look carefully at what that means. It's not just W-2 income, K-1 income, or the have you not. You might be getting dividends. You might be getting interest income. You're needing to really quantify very carefully, and that's why you're needing to walk alongside those financial professionals in the divorce to get you where you need to go. I know Gaitan had to go through this as she went through her divorce, and sometimes it can be a massive undertaking. You're also going to need to have the documentation to back up those income and expenses. So you're going to make sure that you have access to, or that counsel is able to help you get access to the necessary documents that you're going to need to do that. Let me be very clear. This is not just an exercise in futility. This is a document that can survive this situation into litigation if that's what happens. And if that's what happens, that document is in front of the judge as well. So you want to really take the time to make sure you're coming through this and you understand what you are putting on there and why. And walking alongside somebody with this is what's going to be really important. And the other question is, what's marital, what's separate? Well, anything that you've acquired during the time of your marriage in most jurisdictions. And I should say the issue of divorce in the United States is sort of separated in between those states which follow community property principles and those states that follow equitable distribution. That said, you'll want to know that what's going on in the marriage happened during the marriage. So that's a good place to start to determine whether that's marital or separate. And just take your time, make your list, go through it carefully, make sure that this is accurately depicting where you need to be. It is not as daunting a task as it's put out to be, but what makes it less daunting, and I'm sure Lisa, Gary, Gaitan, and Stacy can say it, is making sure you're getting the right guidance and the right governance in filling that out. That is mission critical. It's where I start with all of my cases before we even get into support or any of the other assets. This is job one. And I will say also that this is where all the things that you didn't know come up, right? And so this is where you need to start looking at, there are some of us who don't keep a budget. I'm not going to identify this particular cousin, but she doesn't keep a budget. All right, that's just how she does it. All right, but you're finding out what you're spending on stuff, where the outflow really is. It becomes quite an education for my clients when we sit down with this net worth statement, because they're like, oh, and I'm like, yes. This is where you are. So Stacy, it is a big job, but an essential job, like you said, and really making those lists. That whole breathing exercise I talked about in the intro, so important that you're continuing to breathe through this exercise, because this is where a lot of work and a lot of time is going to need to be put in. So there you go on that.
And I can always tell when a statement of net worth hasn't been filled out 100% accurately. And that's when all the numbers end in a 0.
There you go.
Or a 5. I see Lisa and I see Gary shaking their head too, because it means they've been rounding, right? And guess what? Don't round. This is the rest of your life. And so make sure that you really know the asset values, that you know the expense values. I want to go back to marital versus separate property. Can you talk to us about gifts, about inheritance, things like that? Are those separate, and who gets to keep them?
All right, so anything acquired by gift, devise, or descent, to use more archaic language, is considered separate property. What does that mean in the real world? Anything you've gotten as a gift, anything you've inherited is considered your separate property, all right? And in some cases, depending on the jurisdiction where you live, that separate property is not a part of the whole marital division discussion. It really depends on where you live, and I can't emphasize that enough. If you're living in a jurisdiction such as the one that I practice out of, separate property does not become a part of the marital discussion. It stays there. And so those are the types of assets you're going to want to look at. And you're also going to want to look, Stacy, when you're looking at separate property, has there been any intersection with the community with that separate property? So, for example, a lot of women waiting to get in, and men as well, but particularly people waiting to get married later. You've acquired assets, you've bought a home, you've done stuff by the time you meet the person you want to spend the rest of your life with, right? So you have to be very careful to make sure that in your care of those assets, you don't, the word I'm going to use is commingle. And that simply means spending money during the community on that separate property asset, because then you run the risk of the character of that asset kind of shifting. And in the event of divorce and separation, now you're dealing with a carve out, if you will, of the community's value in something that actually started as your separate property. So if you have separate property, particularly real estate and those things that need to be maintained, really be due diligent about how you're handling that before and after marriage, and keeping those things as separate as possible so that they don't muddy the waters.
I'm adding Lisa to the spotlight here because we have a great question in the chat that I want to ask right now because it pertains to this. We're talking about married couples. Does this pertain to a partner, non-married partner? What happens with assets that have been accumulated during the partnership?
So in New York, we look at marriage starting with the date that you get married. And when we run into problems are when people believe that it counts if you weren't married. So, you can own a house together and it'll be divided according to how perhaps the deed is structured or the shares of the co-op are structured, et cetera. But for the most part, assets that are accumulated during a partnership are not going to be equitably divided. They are not. That is, if it's in his name, it's going to be his, and if it's in her name, it's going to be hers. And there is no accumulation of marital assets because there was no marriage. And it's really important that people understand, and we say this all the time, that marriage is a financial partnership. There's a reason that you sign up to get married. Part of it is that you have developed a partnership under the law. Right. And the law provides how assets are going to be split if you're married. You do not get those benefits if you are not married, unless you have some sort of a contractual agreement with someone. So be super careful about thinking that it's just the same as being married when you're not.
I agree. If you don't have a cohabitation agreement or some other contractual document that you have gone to a professional to prepare, your protection is not what you think it is. So it's just keep that in mind. If you or anyone you know is in that situation and starting to build a life together and starting to acquire assets, it's probably mission critical that you look to getting a document to protect some of that if there's not going to be a movement towards solidifying that relationship within the marital context. It's going to be very important because it's not the same.
Yeah. And I'm going to add something, Stacy, to that because it's really important. I've had this number of times. People often will gift somebody something prior to the marriage, okay? And then they get married and then they get divorced and they say, well, I gave her, the house before the marriage, or I gave him the bank account before the marriage for whatever reason. Maybe it was frankly to preserve it from the other wife. Okay. Maybe it was to preserve it from, some other relative. Okay. Once you give it before the marriage, it's gone because you haven't gotten married. It's their separate property now. You gave it. It's a gift. So you have to be really careful about that. And this comes up, I think, when people do some divorce planning during their divorce, and then they, you know, they have a girlfriend or a boyfriend, and they are doing that.
Exactly.
And I have a couple of questions about discovery, and we are going to get to discovery. We have just a few more questions about assets. This one is something I think we all are interested in. The engagement ring. Is it ours? Or is it marital property? Karen?
In California, you keep it. So
Keep it. And here, now what about this? So I'm gonna, no one judge me.
okay.
I accidentally threw away my diamond engagement ring.
You what?
I know, it was awful. I took it off. I was baking cookies. Everybody knows I love to bake. And I was cleaning the counter. I threw it in the
Oh.
bin. I didn't mean it. I didn't realize it. And of course, realized it 2 days later when it had gone down the chute to New York City garbage. So now I have another ring. It's beautiful. I mean, it's stunning. But this is now an upgrade. So Karen, tell me, is this still mine, or have I just screwed myself in more ways than one?
Your husband still loves you. The intent's still there. In California, that ring is still the upgraded ring, and any other upgraded ring is still yours. And that's by statute here in California.
Okay.
That's not just
Now,
something I'm
New
making
York
up.
is different though, right? New York's different. New York, so if I get
You're out of
divorced, I'm
luck.
coming to see you in California, Karen.
Okay. You can
In New
establish
York, you would be out of
residency and then,
luck.
be clear that that ring is actually yours.
Yeah. So in New York, because it was marital assets, which is true, marital assets that bought the ring, this now is marital property. So I would have to split it 50-50. Yeah, go ahead.
There's one exception, Stace, if you actually were insured and you can show.
I was.
Oh, there you
that,
go.
okay,
Yeah.
so this is, okay, so everybody listen, right? The key to separate property is making sure that you can trace it.
Exactly.
And so if Stacy actually, and I love Michael, so I don't know what I'm going to do in that case, Stacy, but okay, I'm just going to say that if you can trace that you had the ring prior to marriage, you put in your insurance claim, that you then used the insurance money for a
Right.
portion of the upgrade. And let's just say your ring appraises for $100,000. Okay.
Right.
And your first ring, the insurance was $50,000. You have a $50,000 separate property claim against your second ring. But you
Right.
got to have all your paperwork and you got to be able to trace
Yeah.
it. So
And I wanted to bring this up because for a lot of women, they don't have their own money. They have a difficult time. And I don't want to say don't have their own money, but they don't have access to be able to
Right.
put down a retainer to hire their team. And I just want to throw out there that that ring, other than me who made my big oopsie, that can be something to help support you, because so many women struggle being able to get to those liquid assets to hire that group of professionals. So I want to keep on going because I know that we have so many other things. Gary, I'm going to add you to our spotlight here, and I wanted to ask you a quick question. Let me here add to spotlight. There we go. Tell me a little bit about, what's needed, the account statements. What does that look like? What's needed to be able to fill that statement of net worth out the right way?
Right. Well, essentially, net worth statement consists of a couple areas. It consists of the expense, in addition to background information. It also consists of the expenses of the marriage. So you have to understand what the expenses are in the marriage as you are in the marriage. So essentially, you want to include all your medical expenses. You want to include all your living expenses. You want to include all the other attributes that go into your everyday life. But in addition to that, there's a section in there with the assets and the liabilities. And the assets and liabilities, you really have to gather from bank statements, statements of broker dealers, retirement account statements, any other information that you have available. Now, it's interesting because when you look at the net worth statement, it talks about in the liquid assets, those assets that are easily changeable into cash or within a year period, more current assets are fair market value assets. Now, the definition of net worth is your assets minus your liabilities. That will
Right.
give somebody's net worth, or in a corporation, it's equity. But I looked at the statement again today in preparation for this evening, and it was interesting. When I looked at it, it talked about businesses that you own, and it talks about the worth of the business, or the net value of the business. It doesn't talk about the fair market value of the business. And that's an interesting distinction here, because different states govern the way in which businesses are valued for matrimonial purposes. So there is a difference between fair market
Right.
value and fair value of a business. And essentially, the fair market value takes into consideration discounts and premiums. So let's say, for example, you have a business that has a discount for lack of marketability, or you might have a discount for lack of control. Your spouse doesn't own the business outright. They have partners. There's going to be discounts attributable to that value.
Right.
Jersey, it's a fair value standard. There's a very famous case called Brown versus Brown, where they do not take the discounts into consideration for valuing businesses. So location, location, location does matter. So what I'm saying to you is, and you have to be careful, because the business on that net worth statement, don't let your spouse put down the amount that they invested. Lisa and I were recently in a deposition. I'm going to talk about it without giving away any names, but we were recently in a deposition where the husband put in $100,000 into a business. And he says, I don't know what it's worth. I don't even know. I haven't done anything about it. I'm not interested. And a Google search on my end revealed that the company recently had 5 rounds of funding for $14.2 million. So now what we have to do is we have to investigate what the true value of that business is, as compared to what the value is at the time they invested in
That's
it.
true.
And don't be fooled, because things appreciate in value. Just because you bought the house for $250,000 or $500,000, we all know what's happening in today's pandemic with the housing prices. They're up 18.8% this year alone. So you have to be careful to understand what the value is. Jewelry as well. That engagement ring that Stacy baked into her cookies several years ago is probably worth a lot more money today. Sorry, Stacy, but it's
I
worth
know, we're gonna pick on you now,
than it
Stacy.
was.
Yeah.
A lot more dough than it was back then.
Yeah. Can
So
I?
I want to add Gaitan to this conversation too, because we're talking about this and you lived through this, right?
Yeah, I was listening to all this, and one of the things that I was reminded of was when Lisa explained to me about who gets, so if you have a spouse that lives in a different state, and you guys are talking a lot about different state rulings, et cetera, but you actually, the first person to the playing ground actually gets to possess the game. So it's really important for people to realize that if your partner or your spouse, your soon-to-be ex-spouse lives in a different state, and it's more favorable for you to be divorced in the state that you're living in, then you actually need to be the first person to move towards litigation. And it's something that I was very fortunate, because Lisa did give me that advice. And I ended up with a lot more favorable circumstances for myself and my daughters.
Gaitan, can I add on to that, if I may, just very quickly? Because I do a lot of pre-divorce financial consulting with families looking to do that. On the thing to back up Gary and back up Gaitan, if you're considering doing it, and this is the time for you to start gathering stuff. This is the time for you to start printing out, downloading, whatever you need to do. Whatever those documents are, just start doing it. Start doing it while you have the access to it. Planning is everything. And if you know your situation is heading in that direction, don't be idle. Get ready, be proactive, get the statements.
And I would add one other comment, which is kind of funny, because my ex-spouse was a huge narcissist. And so, he thought I was really stupid, and he played me for a fool. And in any other context, that would probably irritate me, but it actually was really good, because I went behind the scenes and gathered all kinds of information that he didn't think that I would ever have, because he thought I wasn't paying attention.
Right.
Yeah.
That's
And
right.
those simple things of like downloading, going to your bank account and downloading all the information from the bank account for the prior 7 years,
Right.
before that account is closed. Because
right.
because before it's closed is the time where you can get that a lot of that very valuable information.
So
Also,
Gaetane,
just-
go ahead, Gary.
I'm sorry. I was going to say also the net worth statement also could be a road. Remember one of the things I said before, trust and verify? I was involved in a case several years ago where we got the net worth statement from the individual that listed all the expenses. And we compared that to the husband's bank statement. And we got actually the canceled checks. And we went through the canceled checks for the bank statement. And we noticed that he was paying for a lawn service. Well, they lived in a high-rise apartment. I also noticed that he was paying for insurance on policies that were not attributable to the address that they were living at. So he had his paramour at a different location, and he was paying the lawn service, the insurance, and the electricity out of his personal bank account. So what we did is we cross-checked the net worth statement against his bank statements. And ultimately we ended up doing a lifestyle, and we uncovered a whole second life that this individual was getting. And I'll tell you how they did it. What he did is he adjusted his withholdings. So that what happening is that his net check was the same amount, but he was taking another deduction out of the check, where he was getting a separate check from his employer. And that check was going to pay and subsidize the lifestyle that he had become accustomed to.
So Gaetane, you raised something that I thought was a couple of things that were interesting. Number one, you raised this whole issue about being in different states, but the same issue can be within the same state. So you really need to know your state too, right? Manhattan may have a very different view of what alimony looks like, or what child support looks like, then perhaps Westchester, then perhaps Dutchess County, then perhaps Long Island. And you're right, it can be sometimes because you might have that Hamptons home, which now more than ever, people might be staying in because of COVID, or you might actually, have a house upstate, or you might have an apartment in the city. And so it's really important to make sure that your attorney, when you speak to your attorney, that your attorney is considering all of these different options, and that the service, when you actually serve, is correct, meaning the summons and the complaint be correct so that you actually serve first.
I mean, I wonder how that will. What happened here? What happened here? Open.
I think someone's on mute. Do you have a question?
Wait, hold on a second.
Okay, so if anyone has questions, you can go ahead and put them in the chat. Totally perfect. I do want to ask a question about discovery. Is there a difference? This came up in the chat. A difference of discovery in which process you're in, let's say discovery in mediation versus discovery in litigation?
I would say so, definitely. And I'm sure Lisa would agree. So just so that we're clear, when I said that divorce has a buffet of choices, mediation was one of them, right? So that is a situation in which you have a financial neutral who is a family law attorney or a matrimonial attorney, who is focusing on just mediation as a way to help clients get through that, right? So the discovery process in that framework usually is a little bit more casual in terms of things. There's not a lot of court intervention. In fact, there usually isn't. And I'll speak pretty much to my jurisdiction. There usually isn't a lot of court, jurisdiction in that. However, if you're needing to be in a litigated context, that's where you can get things enforced, as Lisa will say, things enforced, subpoenas done, orders made, things happening, right? So when I said before, look at your situation very critically and be realistic, that's what I meant. Look at which process is really going to suit you the best. Because if a casual process is working because you guys have that flow, great, but everybody doesn't flow that way. So you don't want to start with a process and spend money on it, realize it's not the right process, and then have to now switch over and find the resources to support that. So I just wanted to throw that in there, Stacy.
So Stacy, I'm going to jump in on that because I think that it's interesting about the buffet. And a lot of people come to me and they ask me what it's like to go to court. And many people are afraid of going to court. And I wanted, Gaetane frankly went through, I would say, maybe like 85% of the entire process from start to finish, we did resolve your case in the middle of a trial. So, but you got there, right? And so people are going to ask, people want to know, what's it like to, for example, take a deposition? When you have your deposition taken, what did you prepare for? How did it feel?
Oh, it feels terrible. It's not pleasant at all. And, you know, being a professional, I expected, I guess, more professionalism on the other side. I was a little bit taken aback by some of the questions and some of the insinuation, you know, that I was frivolous with money or that I was lazy and didn't do things. And you know, it's a formal but informal situation because it's you with your attorney, the person that's defending your deposition, plus the other attorney and your spouse. And, you know, some of the things that you realize that your spouse has told their attorney about you that could be completely untrue come forward, and it takes you a little bit aback. So, and I do have to admit that I think I was probably the only person that ever made Lisa Zeiderman almost get in trouble in a deposition because she started to laugh out loud.
So how did you prep for the deposition? How did you make sure to do the very best on that particular day?
So, you know, you do have to come prepared for a really long day because it is very trying and it's really long, and there's a lot of process around it. So, I mean, you really need to have a lot of confidence in your attorney. Your attorney will prep you for it. Do not say more than your attorney tells you to say. You need to be very, answer your question and answer it honestly, but don't add detail. You answer yes or no as much as you possibly can and stick to yes and no as much as you can. And then when they ask you for detail, you add as minute amount of detail as you possibly can. And if they continue to follow that line, or if they step over the line, do not get involved, don't engage, allow your attorney to actually object.
You went to court. So tell me about what you learned about being in court, because I think that was a whole process for you.
Yeah, I mean, my court experience was probably a little bit different than most people's because I was going through cancer therapy at the same time. And so, you know, it was a little bit tough because I was feeling a little bit emotional about everything was happening. And, you know, I was raising 2 children. You know, so I got some very savvy advice from one of my patients who was also an attorney. And she said, remember what you're supposed to look like when you go to court. And I said, I don't know what I'm supposed to look like. I've gone to court as a medical expert and I wear my suit, my heels. I look the part of a medical professional. And she said, but you're not going as a medical professional. So you need to be clean and tidy. You need to wear, if you're going to wear a heel, wear a short heel. You want to wear a nice pair of dress pants, a nice blouse with a little sweater, no big flashy jewelry. They're going to try to paint you as a wealthy human who doesn't need support from your spouse or does not should not be given any additional anything. And so you don't want to look that way. You want to look like a mom. You want to look like a mom with a cardigan.
A mom with a cardigan.
So, and with respect to court, we had discussions about body language, what to say, what not to say. What advice can you give people about being in court?
So, you know, it's just like what you tell your children on the first day of school, be on your best behavior. So do not speak out of turn ever. Sit and really trust in your attorney. Let your attorney do their job. If you let them do their job, you'll do much better. So I think the biggest things are just staying quiet, staying polite, looking forward. If by any chance you like have other people in the courtroom, really focus on the judge your eyes should always be forward. You shouldn't be looking around the room. There are plenty of interruptions, and it can be really disruptive. And sometimes it's difficult when you're actually on the stand and people do come in and there's interjections and stuff like that. But you have to really maintain your composure, take a big breath in, take your time. And I think that that's the biggest thing. If you're ever in a situation where you have to be on the stand, take your time. You're not in a rush. Breathe and listen to the question and answer the question as it was posed. Don't add detail.
Right.
And for those people who are on tonight, who are going through the process or thinking of starting the process, Gaitan, what does it feel like to be on the other side of all of this?
Oh my gosh, it's such a huge weight. You know, I am so glad that I don't ever have to do this again. I mean, I still go to court as an expert witness, but it feels completely different. You know, I think my biggest piece of advice for anybody going through this is buyer beware, and you get what you pay for. You know, if you have a good attorney, it will help you dramatically. And I think people are like, well, I can't afford a good attorney. And I would tell you, you can't afford not to have a good attorney. Mm-hmm. And the reason I say that is, you know, I have no idea what miracles that Lisa managed to do, but I mean, I actually did extremely well and not only did very well on the financial side, but maintained full custody of my children. So, you know, I think that how you present yourself and how you do in court can have a very big influence on the outcome of your divorce proceedings.
Somebody asked in the chat how long your divorce took. I can't remember. It went on for a long time, but I can't remember.
2.5 years.
2.5 years, right?
2.5 years and 2 weeks in court, actually, right. 2 weeks of a trial, which ended up with a settlement, but it was long. And I liked it when somebody said about their diamond engagement ring, because the first thing I did was sold mine and used it for the retainer for my attorney.
There you go.
That feels good, doesn't it? Like you're like at least getting something.
Correct.
There's a couple questions in the chat I want to make sure that we talk about as well. And both of them have to go around getting support when their husband is either nearing retirement age or is at retirement age. And, you know, would he have to give support once he hangs up his hat? And so what are some of those questions people have? Karen, you want to jump at that?
Yeah, when I see it, first of all, some of that is handled by case law. So some of this could be jurisdictional and depending on where you are in the country. So I want to say that as a disclaimer. But there, in general, sometimes are statutes which limit the amount of support that the payer is going to have to pay past the standard. And we all know people are working way past 65 now, but the standard age is still 65 as far as the court system is concerned. And so this comes up very much in our midlife or our midlife divorce or gray divorce clients. This is huge in terms of the income story. And so you would really want to be connecting with those professionals like Lisa and the like to get the reading on where you live and what needs to happen with that, because that has a lot to do. That ties into how your jurisdiction handles support, period, statutorily. All those things kind of intertwine. So you do want to get that good counsel on that. But we do have state case law out here and statutory law, which does limit what happens after the age of 65. So we have to work within those paradigms, particularly with those couples in that age range.
So Stace, I'm just going to say for people in New York, we don't have a set age of 65. You know, I think it really depends on the case. And frankly, it's going to depend on who the trier of fact is, who's sitting on that bench. There are going to be people who are going to be working past 70 who may be your judge. And that person may have a different feeling than someone who is about to retire at 65. You know, there used to be a judge that I would go before, and that judge would say everybody has a right to retire, but that did not mean, you know, at 59, okay, or 65 necessarily. It also depends on the amount of assets that are in the marital estate. Are we talking, you know, essentially $100,000 and there's not enough to divide, or are we talking 40 to 50 million? There's a very big difference here, and how people can live. There's also the issue of support for children, and sometimes people do have children later in life, and they still have an obligation to support those children. So I think there's a lot of different factors to look at.
For sure.
And there was a great question that came up about the purpose of the statement of net worth, and it was, is it to determine what child support is? And I know your answer is, well, it's much more than that. But if you're showing in, if you're just quickly doing that statement of net worth and you're not including all the real expenses of your children, including the health expenses, the tuition, the tutoring, and you're not showing the real picture, and then you go to ask for a certain number for child support, you now are contradicting yourself. Same thing if you're the person asking for a spousal support or alimony, and you just say, well, I think roughly I spend $5,000 a month. In reality, most people underestimate by at least 30 to 40% what they really spend, and it's much more. You're essentially shooting yourself in the foot. So while that document isn't the end all be all, it really is important to make sure you're filling it out correctly.
Stacy, one of the things that I did that I found, it was a lot of time, but what I did is I went back to absolutely everything for the prior year. So I went back to all of my cable expenses and all of everything. And then what I did is I added it up and then divided by 12. And that's how I came up with the numbers to fill into all the boxes. It's extremely labor intensive, but it's probably the most accurate reflection of what it actually looks like, because as you know, there are some times where like your heat is more, your air conditioning costs more, whatever. So it takes into the variability between month to month as well.
I wanted to respond to the question in the chat about pre-COVID and COVID, because I'm currently working on a litigation matter here in which that was an issue. And so what she did is went back and prepared several versions of budget. Now that's essentially what happened, and several versions of the net worth statement. So we had the COVID one, we had the pre-COVID one, we have the post-COVID one. That was about to go to settlement conference in March, but that is how we address this pandemic issue that we all found ourselves in, because everything was fluctuating, nothing was the same, and people were trying to move and groove through that. And say that was their permanent state of financial flow. So to get around that, that's, as a CDFA, that's what I had my client do in the case, is prepare 3 different sets. So I just wanted
to make a great point.
Gary, you and I actually had this discussion, or actually this experience also, where because we were in COVID, you went back, I believe, 3 to 4 years of doing a whole income stream analysis, essentially, and taking every credit card, it was a big job.
It was voluminous. It was voluminous, yes. And then we also said, if you remember, Lisa, about the husband's business. And I used the analogy that he's in the real estate business, and real estate's depreciable over an extended period of life. So what I'm saying to you is that COVID is essentially a blip in the value of the real estate. So what you've got to do is you've got to look at it, as Karen just mentioned it, not only at the time in which the divorce took place, but look at it a number of different ways. And one size does not fit all. I think what we have to take away from this also is that each person's case is unique. And what we've got to do is understand the attributes of the case and have the professionals work with you to understand what's going on and how the current pandemic has impacted the situation.
Exactly.
There's a comment in the chat that I want to make sure we go to, because it follows up on what you're saying, Gary, of how important the professionals you have on your team. One of the women shared that she's having a hard time choosing a lawyer, and has met with some lawyers who do lots of things: trust and estate, matrimonial, real estate, blah, blah, blah. And then others are just really focused on matrimonial. I'm going to tell you that if I need heart surgery, I'm going to go to a heart surgeon. I'm looking at Gaitan, and she's agreeing, and go just to a heart surgeon versus a heart surgeon / OBGYN on Tuesdays and podiatrist on Thursdays.
It's a great analogy.
You know, I know there are plenty of great people out there that have practices that they, you know, wear all these hats, but I truly believe that going through a divorce can financially make or break the rest of your life. Why would you not go with someone who does it day in and day out?
You
Gaetan, what
also
are your
want to go to
thoughts there?
somebody, oh, I'm sorry, I was going to say you don't want to go to somebody that doesn't reinvent the wheel either, but go ahead, good time.
Yeah, that's true.
I could not agree with you more. I mean, I lucked into finding Lisa because I actually asked another attorney for a recommendation. And then, you know, you can actually look up attorneys and understand what their practices are. You can read about what people say about them. The website that I used was called Avo, and I looked up and I read all about Lisa. I looked at her success rates, you know, and I think that those are some things like you have to really do your homework. Because you do get what you pay for, and you do need to put time in. And I think the other aspect to that whole comment, Stacy, too, is remember what your attorney's job is, right? It's not to be your counselor. It's not to be your psychiatrist. It is only to help you in your litigation process. And so when you have a team, you need a team. I had a psychologist that I worked with. I had my attorneys, I had my investment people. And so I had surrounded myself with an entire team of people, and I let them do their jobs. And actually, they actually helped my attorney also by keeping the emotion out of the courtroom, keeping the emotion out of the court case.
Exactly.
That's so important.
Exactly.
Yeah.
We have some people in the chat talking about some naughty things. And when I say naughty, I mean capital N. And I know my children know if I say that is naughty or with a capital N, or you're in trouble with a capital T, they know it's a big deal. What do you do when you start to see things like that? One person shares how real estate property was given to her husband in a trust during the divorce. The parents took the property back so that it wasn't subject to equitable distribution in the marriage. Who do you go to, Gary, when things like that start to happen?
I think something like that, you would probably, you know, I think that your matrimonial attorney would work in conjunction with the trust and estate attorney, because I think trust and estate matters are unique and they have a lot of attributes that you really have to understand the way in which they're written. I was just involved in actually I was brought in as an expert in a malpractice claim. And this particular woman did just that. She had a matrimonial attorney, but the husband was very wealthy, and he also had a number of assets put in trust, and they were able to break those trusts as part of the matrimonial litigation. And they worked in concert with one another. Like you said, you don't go to a podiatrist for open heart surgery.
That's right. That's right. That's right.
And Lisa, what do you do when you have a spouse who's not complying, who's dragging his feet on the counter proposal? You know, can you go to judicial intervention? And once you do that and you get the court involved, does it mean that they're involved for the rest of the proceedings?
So, you know, it's an interesting thing. So you can't make somebody come to the table. And Gaetan knows that, because Gaetan was actually, she told all of you, she was on trial, right? Because somebody didn't want to come to the table in a way that was equitable. And so she ended up on the witness stand, and in the middle, we settled the case. So I would say to you, the first thing you have to understand is you could always settle your case. If you're in court, you can settle your case. If you're out of court, you could settle your case. It's much better to settle your case with a great deal of knowledge, which is why you hire the people that you do, like Gary, like Karen, like you, Stacy, really important. In terms of the court forcing someone to send a counter proposal, you can't force someone to send a counter proposal. What you can do perhaps is say, you know, I'm done with the niceties of this, And if you're not going to send the counter proposal, then the next step needs to be to go to court so that we can go through the process and get to the end at some point. It may be longer that way, but otherwise you're just sitting and waiting for the counter proposal. So there has to be a deadline. Either you send the counter proposal or we're on to the next wave of this, which is unfortunately court.
That
And
is so true. That is so true. Gaitan, go ahead.
I was just giggling hearing Lisa say that, because Lisa said to me after there was a refusal to actually put the first counter proposal in, said, that's the best offer you're ever gonna get. And then that was true. And she was like, that's it, we're done. And she's like, we're not bartering anymore.
I wanted to just respond very quickly in the interest of time to two things that are happening here. And they relate really to Gary's expertise. If you have substantial assets, if you're tracing, if there's stuff heavy going on in the background, you need a Gary Rosen. Okay, so that's a part of continuing to build your team. Okay, you now need another party because this is becoming a lot more complex. With respect to the comment from someone on the West Coast who's dealing with disability, I want to bring you to the hotline for savvy ladies and get in there so that you can get some direction on how there is a way to handle that. But I encourage you to get into the hotline and make sure that you make it clear that that's what your concern is. And the team at Savvy Ladies will make sure that you're connected with the individual who can best answer that. I can, but it's a more complicated answer. And I'd like to have you get into the helpline to get the help that you need.
And I just want to let you know the people you're seeing on the screen are volunteers. Karen's a volunteer. I'm a volunteer. We have people who have been in this world for decades and worked on hundreds of cases. So, please do reach out and we will make sure to match you based on your question with someone who has the level of expertise that you're going to need.